Hello, I'm Kevin Manny, President and CEO of FocusPortfolio.com, and today I'm going to talk to you about one of the stocks that we got into that didn't work out. Sometimes, they usually work out, but sometimes they don't work out, and this one didn't. Before I start, let me just tell you a little bit about Focus Portfolio. Our portfolio is focused on stocks that lead the market. We invest in America's greatest stock market opportunities that emerge over and over again. And what we've done is we've studied all the great ones over history. For instance, the Home Depots, the McDonald's, Cisco's, Microsoft. And we studied them and we found all the common characteristics and we identified what ones were important. And what we did is what we do is every day we look through at the market and we look for stocks. We search for stocks that have these common characteristics, and we find one that we feel is going to be a big winner and it has all the characteristics and has what it takes to be a big one. We will take a test position in it at a key point, and then we will add to it again at key points over and over and over again, and we add to it multiple times until we have a big position, and that big position hopefully becomes lucrative. And the reason we take small test positions and add as it goes up at key points is we have minimized the risk when we get into these, and we'll see what happened with Blucora as the risk was minimized, the stock I'm going to talk about today. So we take positions, these opportunities, add to them at key points in their big moves, and then the objective is to build a big position and hold them for as long as it makes sense. So with that, let me get on to the stock. It's Blucora. Blucora built this big base from 2008 all the way through to 2012, and a big 4-year base. And usually these big bases are, can become a nice winner. Unfortunately, this one didn't. But as you see here, it's building this base on base pattern it was building. Let me go to the daily chart. Okay, so Blucora was building this base on base pattern as it came out of this big 4-year base, and we bought it here as it came out of this pattern on the daily chart. It came out with second quarter earnings right here, second quarter 2012. And it really blew it away. It came in with 53 cents a share, which was a 165% increase from the prior second quarter in 2011, 20 cents. And then it came in with sales at 101 million, which was an 86% increase from the year earlier, which was 54 million. So big earnings came in, traded 1.6 million shares on the earnings report, gapped out of this base on base pattern, and really looked strong. So what we did is we bought a little test position on this this pattern. Then it reversed the next day and traded off, but it was on much lighter volume than the up day. And then as you see through here, if you look at these blue bars down here below, this is volume, and you can see the big volume on up days, light volume on down days, which gave us every indication that this stock was going to be hopefully a big one. So we added to it here. If you look at these lines, these two lines here, there's two of them. This is the 21-day moving average and the 23-day moving average. Then this other line, this is the 50-day moving average and the 200-day moving average. What we found is these big, great winners, the mutual funds and institutional investors tend to add right here around the 21 and 23-day moving average or at the 50-day. They seldom let them break this 50-day moving average, especially not on. You won't see them break it on big volume on their big moves up. If they break the 200-day, we found that those are good shorts in a bear market. But so anyhow, this stock we added to it here. It broke the 21, 23-day moving average, but it tested this base down here below, and it reversed and went higher on volume, which made us very positive on it. It continued its pattern on up days on big volume, down days on light volume down here, and we added to it here again on its 23-day moving average, and it broke out of this base. So it broke out of this base on base pattern again. Right here on pretty big volume. It almost 1 million shares. All right, here, and then continued the next day on even bigger volume as it broke out. So then it went all the way up to 1863 and pulled back, and we added to it in this area here. It tested its 50-day, and it held above its 50-day all through here as it built. Was appearing to build another base as it went into earnings. Volume was picking up here a little bit on the downside, but it wasn't huge compared to the up days as it built this, as it came into earnings. And then today it came out with its earnings report, and I thought the earnings was really good. It came out with 25 cents a share versus 17 cents a year earlier, which was a 47% increase. They beat the analyst estimates by 4 cents, and he also beat the analyst estimates on the revenue. The revenue came in at 93 million versus 56 a year ago, a 65% increase. But the market didn't like it. It sold off, and although I thought it was a good earnings report, my opinion doesn't count. What counts is what actually is happening, and sometimes you got to admit you're wrong and cut your losses. And this stock sold off huge volume here at the open. We're at 10 quarter to 11 on earnings day here when they announced, and I sold it this morning at the open when it crossed this 50-day moving average on volume. I didn't wait and hold it and hold it for this action here. I mean, I saw it was really breaking down on the earnings, and the volume was big, and it broke that 50-day moving average, which is a place where I get out usually, depending on what the reason and the news and all. But I wasn't staying around and risking our money on this, so I got out, and so people that were in it from the beginning with Focus Portfolio, from here on this gap out, they made a small gain, a very modest gain, but people that unfortunately that got in lately into Focus Portfolio that got it up here took a small loss. So that's why we buy it in small increments on the way up, and this one obviously isn't going to be the big monster stock that we're looking for. So we're out, and we move on and we try to find another. Now, if you look at our videos, you'll find that there's a lot of stocks that we get that do work out, and we do make money for our clients. So if you're interested in seeing what we do and how we make money, come to focusportfolio.com and check us out. I got a phone number up there. You can call me personally, Kevin Manny, and discuss it with me, what we do. But thank you for watching my video, and God bless.